If I had the ability to go back over 8 years ago and start my Forex trading journey from scratch, this is the advice I'd give myself. Number one, without a shadow of a doubt, is to set realistic expectations. So we all want to be able to achieve something super fast, instant gratification, and it's becoming worse and worse. As things become more convenient for us, our expectations are set at that new standard. Yet with things like true, realistic expectations and success in business, and especially in trading, you've got to expand that time horizon. Now, fortunately for me, I was already a business owner, so I already had that expectation that this is going to take me at least a year or two. But even that wasn't really realistic enough in terms of Forex, because obviously I didn't know what I was getting myself into, but knowing that now, it's a case of it's going to take me at least 12 months to really get a feel for the whole concept of how the market moves. What is a chart? What's trading view? What's MT4, MT5? What is a candlestick? Chart patterns? How does the price move? All these basic things like indicators, multi-time frame, how many time frames are there? How many pairs are there? And which pairs should I be trading? All this basic stuff is going to take a number of months at least to sink in properly, especially when you're doing other things like working and raising a family. You can't just commit 10 hours a day into Forex realistically. So it's also about that process of how am I going to find a way of making money? What I didn't know was there are so many different strategies out there that you could make money. And there are so many strategies that work very well. You've just got to pick one, commit to it, see if it resonates with you. If it does, then that will become profitable at some point. We don't know exactly when. It's usually 6 to 12 months or so. However, again, you don't know that if the first strategy that you adopt and you learn is or isn't for you, and you're going to have to go and switch and do another one. And I did that probably 4 or 5 times at least before then coming up with my own concepts that I'd learned from other people, putting them together into a system that worked for me. Now, again, I was fortunately already of that business mindset that things are going to take time. So I had committed myself at least 12 months to the first ever Forex course. And I would go back and do the same thing again. I never had that quick fix 30-day mindset from the beginning, but most of you probably will. Having that kind of short-term, unrealistic mindset is always going to be a hindrance into your success. So always looking long-term. I had the perspective that it's going to take me 12 months, and I honestly believed, and even had conversations with my partner around, in 12 months time, I could be making X amount of money on top of what we're already making from Forex. And how wrong was I? Now, back 8 years ago when I started trading, prop firms didn't exist. And things are slightly different now. Education is much more available, and there's a lot more out there in terms of how to acquire capital and funding. So with this now, if I started all over again from this moment, I would again pick a strategy and stick to it for 12 months. And if it wasn't for me, I'd go and choose another strategy, but I would do nothing different. I would commit to another 12 months, because you've got to really commit yourself technically and psychologically, and you've got to really commit yourself. You can't just say 30 days it's not working, just hop onto something else, because you're instilling bad habits. But also in terms of funding, like how soon can I go for a funding challenge? Realistically, there's so many variables involved. It depends on your mindset, depends on your lifestyle, depends on what's going on in your life as well. Do you have the time? Are your emotions in check? Are you regulated? There's lots of things that could go wrong if you're in a place where you're already trying to rush the process to prove other people wrong. You don't want to be in a stage like that when you're going into a funding challenge, right? But you also have to make sure you've got a solid mechanical edge in your trading, technical edge, that you know you've got some kind of track record in yourself, whether that's back testing or live trading, that you can prove that that can pass a challenge and be sustainable over the long run. And that's going to take some time, easily 3, 6, 12 months to do that as well. So just having that expectation that, okay, I should be learning a strategy. I want to commit myself for 12 months. And realistically, I shouldn't really be going for funding until I've really committed to myself at least 3 or 6 months of that strategy. And I've built a track record myself to prove to myself and give me that inner confidence and self-belief that I can make this work and pass a funding challenge and actually maintain and keep that challenge and get payouts. And that last thing is something that I didn't have because I was a business owner already. Although I did have an exit plan, I was looking to sell the business about 4 or 5 years before I eventually did in 2022. Loads of you will be looking to quit your job. It might be a case of you want to become a full-time trader because you think it's cool. That's probably the wrong mindset. Keep your job or allow Allow yourself to trade while you work. If your job doesn't allow that, go get a different job. Because you're just going to put too much emotional stress and pressure on yourself to make money to pay the bills from trading. You can make great money from trading, and it's excellent, but it's also good really as a secondary or third income stream. And it's about being ready to actually quit the job if that's what you want to do. If you want to focus on another business, you want to quit the job, do trading and something else, work from home, that's great. Just make sure that you are properly ready for it. I felt really ready to sell my business about 4 years before I eventually did. And the moment that I decided I'm actually going to take action and sell this business, it still took me 2 years to find a seller and go through the whole legal process and actually be where I can walk away from that business and focus on trading fully. So I actually wouldn't do anything different for me, but if I was working a full-time job, I would make sure that I am still working that job even when I'm funded, even when I'm consistent, even when I'm profitable, to a point where if I absolutely hate that job, I want to go do something else, either work another job, maybe reduce my hours, or potentially look at doing another side hustle so I could be from home, work from a laptop or PC from a home office, and without staring at the charts all day, but also make sure I've got multiple income streams. Number 2 is embrace the challenges. This is something, again, I was fortunate enough to already have the perspective of. However, there was still challenges that I faced that I didn't feel I was going to. Things like margin calls on funded accounts. Back then, there was a case where you had given it an account, and then if you get below like your 10% threshold, you don't lose the account and have to do a challenge again, you just top it up. You get margin called, you top it up, you put your money back in there. As soon as the FCA found about that, they changed regulations, you couldn't do that anymore. But that was something that I was doing because I felt like I wanted to make money. I was really impatient to make money from Forex. And that's something that I know I would go back and change now and be like, look, you're not ready yet. You're only 12, 18 months into this, and you don't actually have a solid 12-month backtesting data. I was just waking up every day, forward testing, doing my analysis, felt like I could make money, looking at the chart, seeing it as opportunity, and then opening up an account and then putting money into it. And that is something that I definitely could go back and improve. If I could go back to myself and say, now is not the right time to focus on making money. Now is the right time to focus on the strategy and building a track record. I mean, even backtesting 8 years ago wasn't a thing. It was only about 6 years ago that that became a thing. And now it's something that everyone's doing because it's something that obviously proves the strategy works over time. It helps you to ingrain a subconscious attitude towards that strategy and the rules and the schematics around that strategy. And it gives you the confidence to execute, knowing that the results over a period of time will be profitable. It gives you that edge, right? But things like trying to make money too soon and then hitting margin calls, topping it up, trying to make money again, hitting margin call, topping it up. These are the things that I didn't expect to happen, maybe once or twice, but it happened way more than that, believe me. And it was something that was very, very frustrating. The other thing was actually like the support network around me. I've spoken about this before on podcasts where my very closest family, even my partner, was like, what are you doing after like 3 years? It was like, you're not making money from this yet. Don't you want to do something else? You should be making money by now. And this is the problem with talking about people that don't understand Forex. It's difficult enough when you speak to someone that's not risk adverse and you say you want to open a business. They will try and put that idea down. They'll say it's too risky. That's already dead in the water. But if you start to mention Forex trading to someone, it's like 10 times worse. But I'd go back and actually tell myself not to tell anyone about it, but it's difficult when you live with that person. And you understand where they're coming from because they obviously are worried about you. They want you to succeed. They don't want you to waste your time, waste your money, potentially waste their money as well. But it's one of those things where you've just got to keep your ears shut and just keep going. And it's another reason why, again, you shouldn't quit your job too soon, because as long as you're bringing in money, as long as you're paying the bills and you're not being completely antisocial with your family, then there should be no reason why those people around you should have a problem with what you're doing. You know, focusing 1 or 2 or 3 hours a day on a craft that in 4 or 5 years can pay absolute dividend, give you and your family an incredible lifestyle, is not something to be frowned upon or argued about. But as long as you're bringing in income and you're contributing during that 2, 3, 4, 5 year period, that's the important thing. So I was very much focusing on my business, making sure the bills were being paid at home. And then outside of that, I was looking to grow this skill and this craft called Forex trading. And it didn't matter to me that it was taking me 3, 4, 5 years eventually before I actually start to see consistency and start to get funding payouts and achieve an income from Forex. But that was definitely a challenge in itself that I didn't expect. Number 3 is becoming more and more challenging as social media becomes more of a normal thing. Again, 8 years ago, it wasn't so much. People weren't really talking about Forex that much online, whereas now it's everywhere. You open up YouTube and there's an advert. You open up Instagram and there's stories about it. You've got to really think, if you're watching someone else who seems to be doing very well out of Forex trading, do not be envious or jealous about what they're doing, because you don't know how much effort, time, and how many challenges and how many years they put into this craft versus you. They might say they've done it in a year, and that's going to really affect you if you've been putting 3 years into it, right? But you've got to understand that everyone's different. Everyone is on the same journey to be a successful trader, but they all have different journeys. They go to different Forex mentors, they learn different strategies, they trade at different times. One person might take a challenge during a corrective period. The next week, someone takes a challenge during a trending period. Does it make them a bad trader and a good trader because one loses the challenge and one passes? Not really, it's market variables, right? But there's so many different variables involved. One person might be 19 years old, lives at home with their mum and dad, is rent-free, works part-time at Starbucks, has no children, isn't spinning lots of plates, and manages to nail down a strategy in 6 months, versus you that has 2 or 3 children, a part-time business, a part-time job as well as that, a house to maintain, all the bills to pay, and you're trying to learn that same strategy or a different strategy, and it takes you 2-3 times longer. That doesn't make you any worse of a trader than the next person. It doesn't mean that you're not going to find success. It just means that your time scale is going to be a little bit different. And that's something that I faced, definitely, because although I saw inspiration from the people that I was following, I'm not gonna lie, there was a little bit inside of me where I was thinking, how is it taking me 4 or 5 years to find consistency when this guy or this girl's done it in 12 months or 2 years or 3 years? Or I just really want to be where they're at, right? So like 98% of it for me was motivational, but there was always that 2 or 3% that was a little bit like frustration. I want to be there. And it's just, again, it affects the patience. So one thing I did, and I probably would do more often, it probably was a once a year thing. I called it like a clean out. So I'd go on my Instagram and I would unfollow loads of people that would like posting lots of strategies on their stories and payouts and stuff like that, because I found that the more I followed, the more I watched, and the more that took my attention away from my own trading. So just limiting who you're watching. Maybe if you're learning a strategy from someone, just follow that one person and either unfollow or just mute everyone else. Don't unfollow them, but just mute them so you're not consuming their content, because the more people you look at, the more your focus has been spread thin. You really want to be focusing on just yourself, that one craft, your one strategy, your one mindset, your own routines, habits, and rituals, and then just seeing that plan out over the long term. If you're looking at 3, 4, 5, even 50 different traders that are doing completely different strategies to you, that all have their own individual journey that doesn't correlate with yours, of course, they're going to have different successes than you at different time periods as well. So that's something that is definitely, I see a lot, I hear a lot as well. People watching people on yachts in Dubai or driving Lambos in Miami or living in penthouses in London, and they feel that they're either never going to achieve it or they feel that they should have already achieved it. Why? You're comparing yourself to others, and comparison is the killer of joy. You will overestimate what you can achieve in a week, but underestimate what you can achieve in 2 or 3 years. And in 2 or 3 years time, you will be looking back on yourself right now thinking, geez, remember when I was doing this and when I was doing that, and now look at me. So just compare yourself to yourself. Don't compare yourself with others. Only get inspired and find motivation from the success that other people are doing. I'll just pause the video there and give you a little bit more information about who I am. If you didn't know already, my name's Scott Taylor. I'm a co-founder of Evolution Markets FX, where we help create traders following a mechanical rule-based system, trading off the higher time frame, helping our traders go from 0 to funded within a period of 6 to 12 months. We teach with a full broken down video course library that you can see here. Every element of the strategy is broken down, including fundamentals, technicals, psychologicals, and more. We also have a Discord community where like-minded traders and a professional group help each other out, and it's where you can ask the coaches questions, you can celebrate your wins, and everybody grows together. Just like our successful traders like these who have gained funding recently, and those that are achieving regular payouts like these. So if you're interested in learning our mechanical trading edge and becoming consistent, profitable, and funded, look at the description below and there'll be some links to join the mentorship. Anyway, back to the video. The fourth one goes without saying, and it refers back to point one. It's having that edge. Having a rule-based edge will reduce chart anxiety, by the way, and will instill patience and discipline. If you ever feel emotional about what you're doing, have a moment to reflect, and I guarantee that you're taking trades just based on what the chart looks like because you want to get involved and you think, oh, I think the chart's going up, so I'm going to buy, or I think the chart's going to go down, so I'm going to sell. And I'll just take a quick profit, but you take a loss. And after you take the loss, you enter again because you're chasing back that loss. That turns into 2 losses. You're chasing that one, that turns into 3 losses. And you're just this emotional spiral completely out of control. And it's because you're trading with emotion rather than with discipline following a mechanical edge. It doesn't matter if you trade 1 time frame, 1 pair and 1 entry model, or 15 time frames, 13 pairs and 4 entry models. Whatever your rule set is, you've got to stick to it. And you've got to stick to it to a T every single time. One thing I found, if you're struggling with discipline to stick to your edge, and is one thing that I would tell my previous self, because I definitely went through that whole emotional roller coaster of fear of missing out, lack of patience, chasing the market. Less is more. Cut back on the time frames you're using, cut back on the pairs that you're trading, even cut back on the amount of time you're spending on the charts, and say, right, I'm going to do the bare minimum, but really the highest probability trades that I can possibly find, and write down pen and paper or on your laptop what your rules are, and tell someone. Like, you're about 50% more likely to remember it if you write it down. You're about 80% more likely to remember it if you present it to someone else, right? And then just stick to that, because if you strip it back and do less, that's going to instill discipline and patience, because you will see the market move without you, but you've got to say to yourself, I don't care that went up 200 pips because that was not my plan. You've got to go through that process of maybe 4, 6, 8, 12 weeks. Everyone's different, to really instill those habits, those positive, powerful habits of patience and discipline. And then when you've found that, that's when you can start to add more things in, like more entry models, more time frames, or more pairs. But whatever strategy it is you trade, whether it's a multi-time frame with a lower time frame entry, or a higher time frame with a singular time frame entry model, set 2 to 1, 3 to 1, or if you're looking at targeting structural highs or lows, whatever it is, make sure it's rule-based and make sure you're following it to an absolute T, because that over time will be the edge. It's like the casinos have an edge, what, about 2 to 5% edge over the year on the consumer that's going in. Sometimes the casino gives the money away because sometimes the users win. But most of the time at the end of the year, the casinos are winning. And you can see that because these casinos take a lot of money to run and build and construct and staff. Okay, to pay the bills, the casino needs to make money, and they're definitely making money, because think about how many casinos there are in your town. There's probably 5 to 10 in every city, major city in the globe, right? So you want to think like a casino and know that you're going to have expenses, which is your losing trades, but over a large enough sample size, which really for me, a month isn't really enough. I would say a quarter is a reasonable time scale of a sample size of trades to say, okay, as long as I was disciplined and following my edge during that entire 3-month period, which is going to be difficult. It's easier said than done. But let's say 90% of the trades that you took were following your plan and not emotional. That's a good enough sample size to say whether whatever you're doing technically is working. Don't look at any individual trade outcome, any individual week, or even any month, because you have a really slow or bad performing month, and the following month, the first week of the next month, could absolutely blow up and completely just take over what poor results you had the last month, right? You could have, an incredible November after a poor October, or an incredible January after terrible December. That's why you got to look at it over a larger time scale, over a 3-month period. And that's where you can let your edge play out as well. If you've got a 40, 50, 60% strike rate, you can't just say, oh, for 3 trades, I'm going to be profitable, because those 3 trades could be losers. They could be winners, and it's not giving a realistic test. It's not fair on the edge. You've got to give it statistically and mathematically enough sample size to be able to let that edge play out. And if that means going 2 or 3 weeks of drawdown, or 2 or 3 weeks without taking a single entry, don't let your emotions take control of you to want to make that money back that you've lost, or just be active in the market and go off plan, because that's going to completely manipulate your edge and your sample size for that period. Okay, number 5 is utilizing prop firms. Prop firms are an absolute blessing. I'm not going to be one to sit here and complain about them. I'm not going to be the kind of guy that says they only make money from losing traders, because we know they do, but that's the business model. At the end of the day, they solve a problem. They have a solution to a problem where most traders don't have 100 grand or 50 grand sat in a bank account that they can afford to lose and afford to invest in the financial markets. But most people have anywhere between $50 and $2,000, depending on the account size, to put into a challenge 2 or 3 times a year. Now, one thing I wouldn't recommend is just going and spending $500 on a challenge if you don't have $500 to lose. Only go for a prop firm challenge that's going to cost you the money that you can afford to lose. And think about, okay, if I lose this one, how long am I going to have to wait to then invest in another one? So if you're making $1,000 a month working full or part-time, you definitely don't want to be using 50% of your entire monthly salary on a challenge, because you know that even in a 3-month period, that's still a lot of money for you. Whereas if you're making $6,000 to $10,000 a month from your business or from your employment, you know that you can afford even a 200 or 400K challenge every single month, potentially. The account size to go for and the challenge fee really has to correlate with your income levels at this moment, because 1, it's maths and you don't want to run out of cash. But 2, the amount of money that you're investing into that challenge and the ratio of that to your monthly salary is going to impact your emotions during that challenge, because you're not going to want to let that challenge go. You're not going to want to fail that challenge or that verification if it's cost you 50% of your entire monthly salary and you're going to suffer because you can't put food on the table for the rest of the month. Think about that. I mean, it's only like $50 to $100 for a 25, 50K account nowadays. And actually, I would go back to my previous self and say, instead of putting 10 grand of your own money into a personal and try and make £1,000 a month from that, which is extremely difficult, and over leveraging and putting your account at risk by doing that, I would put $50 to $100 a month away for challenges. But of course, this time 8 years ago, prop firms weren't really a thing. But if they were, that's exactly what I would do, because it's a much worthwhile investment. It's a smaller amount of money up front. Yes, you've got to go through a challenge, but that is almost like a test for you. It's not necessarily a test for the prop firm, for them to decide whether you're worthy of their money, their virtual money, but it's more of a challenge to yourself. If you're failing the challenge, then perhaps you're not ready for it. Perhaps you're not technically there yet with your edge. Perhaps you're not quite there with your emotions. Perhaps your lifestyle is too hectic and you're not ready for it. They're the 3 variables that you are in control of. The 4th variable that you're not in control of is market conditions. And that's just something that you're just going to have to suck in and see. Because if you end up in a trending market, you're going to pass your challenges and verifications very, very quickly. If you're in a sideways or volatile market, or a period of the year where it's like the summer holidays, for example, where volatility and liquidity is quite low, you're going to find it more challenging to pass funding challenges, because your trading results are going to reflect the seasons of the year. But 100% I'm a massive advocate of utilizing funded accounts. I don't rely on them anymore, although I'm still, to challenge myself and prove my strategies work, I've taken 2 challenges, 2 verifications this year, passed them both first time round, and I'm on a 3rd one now that I've just passed the challenge phase yesterday, and I'm on the verification stage from whenever the first trade is on that. So it's something that's definitely worth doing. You can use trade copiers to link them together. So if you've got like 4 100Ks like me, you could just add them all together and trade on one account. As long as you've got a solid risk management strategy in place, I wouldn't recommend risking 1% on a funded account, because you just don't need to. Any profit that pays back your challenge fee is a bonus, and then that's completely risk-free. You can put that challenge fee into another account and just diversify it and get as many challenges as possible. Is a great theory, but just make sure that you're patient with it and know that if it takes you 3 months to pass a funding account challenge verification and get funded, then it's going to take you 3 months. If the statistics are that most traders, like 95% or more, don't even pass the challenge and they fail in the first few days, and you're still in your challenge 30 days later, you are already in the minority. You're in that top 5%, maybe even better than that. So pat yourself on the back and know that your time will come. You either win slow or lose fast when it comes to challenges. And although this week I passed the challenge in 1 week, Previously, it's taken me 60 days to pass the challenge and 30 days to pass the verification. And that's just the way it is, right? The market is going to only give you what the market is going to give you. And then the rest of it is down to you and when you're trading, what you decide to take, how are your emotions, what's your lifestyle like, and how does it all fit in? The pieces of the puzzle have to come together correctly, and there's so many variables involved in your trading, but utilize prop firms to your advantage, but never put one prop firm on a pedestal. One thing that I did have about 7 or 8 years ago, it was probably 7 years ago now, so very early in my Forex journey, is they had a funded account. It was actually with the education provider that I was using, and I was paying each month for it, as well as having to put some money into it. And it was a 25k account, wasn't a lot, but it seemed to me quite a lot of the time. And I honestly thought I could make loads of money from it. I thought I could make like 5-10 grand a month from such a small account. And I think some of that was based on what I was being told by that provider that I could. So they were giving unrealistic expectations. But really for me, knowing what I know now is that anywhere between 2, 3, 5% a month trading profits over the year on average is extremely good. Knowing I can tell my previous self that you don't need 10, 15, 20% a month to be a successful trader. And the last one is networking with other people, other like-minded traders. I have so many trading friends from other communities. They have their own courses, their own mentorships. They trade completely different strategies to me. And I'll link up, I'll do podcasts, I'm meeting a few next year. And I speak to other traders and other community owners all the time on Instagram. And I absolutely love that about the industry, that there is just no competition. And one thing is just communicate with people that are doing what you're doing or are doing what you want to do, because you're going to have so much more in common with them, and you're never going to be shut down by asking them a certain question or highlighting a topic. Whereas again, if you speak to your mum, your dad, your brother, your sister, your work colleagues down the road about Forex, they're going to be like, what are you talking about? Or they're probably going to laugh at you and say, that's never going to work. And what's that going to do to your psychology? Not too much. It's either going to instill a lack of confidence in your trading, or it's going to make you want to rush to prove a point. So just talk to people that are doing what you're doing. Be a part of a community. Even if you're consistent and you're profitable, you've still got to have other traders to talk to. And it doesn't mean that you have to go and pay for a community, but just reach out and talk to other traders online. That's the great thing for me. Like, I use Instagram mainly as a network tool. And like I say, even other communities that I've been in the past, I'm still in touch with them. And if it's a picture of a coffee now and then, or just saying, oh, I took a similar trade, how's the markets going at the minute? Should we meet up and have coffee? Let's go out for food and do a podcast. These little things are so important, because trading can be such a lonely game, especially in the early stages of your learning journey. Make sure that you are part of a community or a small inner circle, and have maybe accountability groups. Myself and my business partners at Evolution Markets, Tom and Callum, we were all part of very similar trading communities years and years ago. I'm talking like 5-6 years ago. And we were kind of branched off into smaller like Slack groups at the time, and become WhatsApp and Discord groups. And that's how we met. We went to trading meetups together, and that's how we bonded and built relationships and friendships. So you never know what these relationships and these networks will also turn into, opportunities to grow together. But also just to make sure that you've got things to talk about with like-minded people that are not going to just shut you down or laugh in your face. They're going to inspire you. They're going to appreciate you. They're going to instill value and encouragement into what you do, and share ideas and help each other along the way. And that is super important. And that's exactly what I would do if I could go back in time 8 years ago and give my previous self advice on what to do if I started Forex trading from scratch. Let me know in the comments if there's anything else that you would do to your previous self to give you advice to speed up that journey and make that process easier. And the best comment I'm going to give a 3-month Evolution Markets FX subscription for. So go comment below. I'll give you 48 hours to leave a comment, and then I'll do a draw in the YouTube comments and pick a name at random. Make sure you're subscribed for weekly videos and turn those notifications on, and I will catch you on the next one. See you later.